Alrighty, and we are live. We'll be beginning in around 2 minutes. Just wait for a few people to get here. We have some interesting things to talk about today. And we have a special guest with us. The gorgeous, the beautiful Trisha herself.
And hello everybody, what's crackin'? Alvaro says fall is starting here. I don't mind, I prefer the cold. Alvaro, you would have really liked Canada. Canada. It's like crazy cold there, apparently. That's what my folks tell me at least. Mock is in here. Thank you, Mock, for joining. Our mods are amazing. We got Mock in here, we got Julian. They're gonna bring the hammer down. Boom. Hey, Stan, how's it going? How do I pronounce your name? Is it Emery? Can't feel bad about Bitcoin. Curious to see if it breaks through. Oh, aren't we all curious? Aman Singh, how's it going, man? How's it going? So yesterday I found something pretty cool. I don't know, for those of you who actually caught the Cardano video, did you guys notice that fear and greed was sitting at fear and the markets were just rallying, like all the alts at the very least? That is the divergence that people need to be keeping their eyes on. Divergence plays, sentiment of divergence plays. Canada is a different level of cold, man. I kid you not, there was this one time I was out with a friend and we were walking to a restaurant. And it was so cold, and this restaurant was like it was a 5-minute walk, right? It was so cold that my eyes started watering. And by the time we reached the restaurant, the water on my face, the tears that were rolling down my eyes, that they froze on my face. It was insane. It actually froze on my face. I'm like, what is this? Why does my face feel so heavy? Sherman is in here. What's cracking, man? Good morning. Stan, that would be like healthy price action, and that's, I think, essentially what people should want to see. You want healthy price action because every time there's like a break, at least if it's a volatile move, more often than not it has an equally volatile pullback. And there's like one certain signature that we keep catching on Bitcoin at the very least, is that on the daily time frame, any critical sort of time frame, I usually look at the daily or the 2-day. Bitcoin's first take of the 21 EMA, every time it reclaims the 21 EMA, it usually gives it back quite immediately, and it's usually that the second time it takes back the 21 EMA is the time that people need to be keeping their eyes out on the bullish side. JP Ledesma, how's it going, man? Good morning to you too. Easy Shoda's in here. Hey. Mojako, or is it Mohako? 44.7k. Yep. I'm looking at 47k. I think 47k is going to be that critical level. We actually break and we close over 47k. I'm saying that the picture changes entirely. Waiting for the pullback. What? Come on, Maspo. We have been in this range for some time now. This is actually reminding me a lot of the 3k region. How many of you were here in the last bear phase? Loin of Judah. Let's go indeed. 5k. Seriously, 5k? Come on now. Don't be so bearish. But no, that would be a gift. In a way. If it's successful, buckle in. Marcel, morning to you too, man. Okay, 50k, alright. That was a massive typo, man. Agree, Shervin. There is so much bullish news for Bitcoin right now. It is insane. Like a lot of the macro minds out there, at least the ones that we respect, a lot of them, they're looking at Bitcoin, you know, they're just like, it's completely underpriced right now. And I am in agreement with that. What's going on in the world right now, Bitcoin is underpriced. How many of you guys are playing the alts? I'm not seeing like that usual sort of frenzy on the alts. I'm not seeing that, and the alts are making some amazing moves, and there's some very, very clean trade setups. I found one on eGold, Elrond, a couple of weeks ago, and man, that was a good, what, 30-40% range on that, and it was super easy.
So what are we talking about? By the way, guys, let me know if the music's too loud, if Krisha is too loud, if you guys want me to mute her. I know she gets a bit annoying. She talks too much. I know better than most. I've been dealing with this for 10 freaking years.
Sean could, he had 3 wishes from a genie or something. One would be to have a remote.
Yeah.
For me. Mute, rewind, fast forward.
Rewind, not so sure about that. Fast forward, yeah.
Wow. Stampy's like not playing alts yet, expecting a Bitcoin only run. Interesting. Very interesting. Farm coin people.
Perhaps we see a altcoin push towards the upside. I'm seeing the lower cap alts, at least the mid to low cap alts, look really juicy at the moment. They may actually be bait for people to put their Bitcoin into those coins, and then Bitcoin actually breaks out of the massive range it's been consolidating in for the past, like, God knows how long, 1 year now essentially, and then Bitcoin just keeps going and going and going. But again, let's see how things actually play out. Gotta play it one step at a time. But altcoins are looking good. You gotta call a spade a spade. And Krisha, what are your thoughts on alts?
I really like them. I think a lot is looking good. They're all holding like critical levels, but now it's so it usually reaches a juncture. Now people usually their eyes are drawn to the alts when it's time for the next pullback, right? So I'm saying that while you are, if you are looking at alts, be very vigilant about the levels, because yes, while they are taking a turn, you can see that trend sort of shifting. On the macro time frame, Sean, I still think we're still in bearish territory. These altcoins are still in downtrends. At least quite a few of them are still in that prevailing macro downtrend. So that's something that we need to understand before just jumping the gun and looking for trend trades. So I'm still not looking for trend trades. Just a quick heads up.
Yeah,
White Dragon says we love Krisha. Did you hear that, Sean? Did you hear that?
Yeah, we all love Krisha. That's why we tolerate her. Here's the thing though, Krisha. I took a look at Cardano on the monthly, and I was just, my jaw dropped. That thing has been red candle after red candle after red candle for 6 months, I think. On the monthly, there we go. Stands like we love you too, Sean. Finally, some love comes my way. I think Murli got my back too. Murli's about to say it. He's about to say, I love you too, Sean. I love you more than Krisha. Alright, we should begin soon, or at the very least we should show the charts, because this stream's starting thingy. I don't have my cam set up today, guys, unfortunately. But let me just switch on over to my charts. Wait.
Alvaro got the equation right there. He says no Krisha, no Sean, no Sean, no Krisha. Boom!
Yeah, that's the right way of looking at things. Alright, let's see. Alright, cool. Trading view. Alright, so Krisha, I want to talk about something.
Your chart is not showing. It's on a static trading view.
How about now?
Okay, there we are.
So, I want to talk about something specifically today. And if you guys have been paying attention in the seed chat, I've been talking about a few triggers that I've been looking at, right? And one of the triggers actually triggered yesterday in the morning, and we saw Bitcoin literally rally right after. Okay, you guys know which one I'm talking about. I'm not going to say it out publicly over here because it is one of our big signals, and I'll wait a tad bit more before I release, or rather give out that information. But yeah, that trigger hit, and then soon after that, the second trigger was likely going to hit too, and that was essentially the 4-day, which I'm gonna be pulling it up right now, the 4-day 21 EMA. I don't think we have it yet. It's gonna be triggering in around 11 hours and 46 minutes. So the 4-day 21 EMA, Kusha, we're about to finally close above it again after losing it all the way back here on December 3rd, the beginning of December. So it's been like what, December, Jan, Feb, and almost 4 months now that we've been living underneath the 4-day 21 EMA. So we might be looking to close above it, but I'm still looking for us to actually confirm above it, right? So we want both close above it and confirm above it. We don't have that just yet, but there's something else that is also going on that lines up perfectly with this. And do you know what I'm about to talk about? Do you have any clue? It's on the 2-day time frame. You should know this. You should know this.
I should?
Yeah,
Damn,
you should.
It's pressure,
It's
Sean.
pressure.
C-SPAN trade.
No. So everything's coming together over here, right? Everything's coming together because at the moment, let's start with the original chart that I had up open, which was essentially the weekly dynamic. We're coming up against weekly resistance on the dynamic, which is also lining up with the beautiful ascending triangle. We've tested this now once, twice, thrice, and this would be the 4th test essentially while putting in high lows, right? You see it?
Yeah.
Okay, cool. If we break out of this, it's going to be significant because the last time we were living above it was in this region over here. We were using it as support. We were really bullish during this period over here. This period over here, we weren't as bullish, even though through a horizontal perspective, it was the same level. Now, if we reclaim it, that is good enough reason to get as bullish as we were over here, at least to play the range to the top of the range, which would be around let's say around $65,000, right? So there's a good trade from around $47,000 all the way to $65,000. That's a good $20,000 trade at the very least, okay, just based on the weekly time frame. So that is provided we claim the weekly dynamic. So are we seeing any signs of that happening on the lower time frames, right? So we want to look for clues, and we do have signs on the 12-hour time frame. I talked about that throughout the week. I did a couple of videos on that. We have two signs, two major indicators. One I'm not going to reveal. The second one is essentially the Ichimoku. On the 4-day, I just talked about what's going on over here, which is essentially us perhaps confirming above the 21 EMA, the 4-day 21 EMA. Now, you and I both know that, Krisha, usually the first reclaim of the 4-day of any 21 EMA on any trend is a fake out. After being in a downtrend for a long time, right? The first claim is a fake out, right? We've talked about this before.
Right.
So that's essentially what we got over here, correct?
Right.
So now, if we actually do claim this 4-day 21 EMA, I'll be looking for it to get defended. If not, that's going to be a bad sign. What's the 10 SMA doing on the... Okay, so we've claimed the 10 SMA. You can see it curl up towards the 4-day 21 EMA as well, so that's a good sign. Yeah. But we're not going to pay too much attention to that. The next thing I'm looking at, guys, is actually the golden cross on the 2-day time frame, which, by the way, is a major indicator that I look at in terms of guidance for bullish and bearish posturing in the macro scheme of things. All right, this actually guides whether I'm going to be more bearish or not for my short trades. Essentially, whenever the golden cross triggers, or rather the death cross triggers on the 2-day time frame, I am not going to be taking short trades, or I'm not going to be taking long trades, and I'm going to be looking for short trades. Okay, I don't trade the golden cross in terms of levels, although you can. I'm going to show you guys a good back testing of this very simple indicator, but very powerful indicator. You can use it, guys, to have your mindset flip bullish and bearish, and then base all your trades off this. Okay. At the moment, Krisha, we were threatening for the past few days to actually trigger the big bad death cross on the 2-day time frame. Look how close we came. Look how close we came. But it lined up perfectly with us testing the weekly dynamic, as well as your 3-day call on the 200 moving average, right? I'm going to show that quickly. Remember, guys, Krisha has been talking about this right here. Right, she's been talking about how we are likely going to get defended on the 3-day 200 moving average. If we don't, we're going to see the big move towards the downside. We talked about how the Tenkin, if we do claim the Tenkin 21 EMA squeeze, we're likely going to see the big move towards this level over here, right? And all of this is lining up with us actually coming in to defend the golden cross on the 2-day time frame. Okay, we're back over here. So there we have the 3-day Ichimoku twist, and just when the bears were threatening to actually cross this bearish, it seems like the bulls want to defend that cross. So if we close the 2-day time frame above this green 55 EMA over here, guys, this is the green 55 EMA. So the green line over here is your 55 exponential moving average. The purple line over here is your 200 exponential moving average. If the bulls start closing multiple candles over this, we're going to start seeing the green again start moving away from the 200 exponential moving average, and the divergence start building up again, right? We had the divergence for the longest time. It was threatening to cross bearish, and now it looks like the bulls want to defend it. But let's go back in history and see how this has actually performed through the history of Bitcoin, and it's actually given you some really good edge at least through your mindset, right? Posturing yourself for the rest of the market. You can literally use this for your altcoin trades as well. Okay, so here we are looking at BLX, Krisha. Can you see my screen, by the way? Are you watching? Are you keeping up?
Yeah, no, I am. Go on. Sorry, I'm just looking at your chart.
Okay, cool. So we're looking at BLX at the moment, and we've gone all the way back to price history from 2012. And what I've done for you guys is I've marked out the key areas of either an attempted death cross or attempted bull cross, golden cross, or an actual cross, right? So if it was an attempted cross that was defended, I've marked it out in like a light orange. But if it is a yellow, but if it is a actual cross, I marked it out in an orange. We'll go through it though right now. So here we're looking at 2012. You can see that the markets had pretty much just started its price history, so we don't have enough history for the 200 exponential moving average. But what's important over here to note, guys, is that the green 55 actually converged down on over to the 200 exponential moving average. It converged down, right? It came down to it. It didn't actually cross. What happened instead was, as soon as we start deviating further and further away from price actually came in to defend the bear cross, the death cross that people call it, right? It started defending it, closed above it, and then once we did that for multiple candles at the very least, you initiated your bull market. Okay, we took price all the way from around $6, where was its initial high, pulled back down to the 200 exponential moving average, and then took price all the way down, all the way up to $300, right? That was a good rally, all the way there.
Good rally. That's an understatement.
Yeah.
Okay, so before I give you my thoughts on this, Sean, your mic is a bit. I think Mark is right here. It's peaking a bit. So you're. I think you're a bit loud on that. Either sort of turn the volume down or.
What now? Is that better?
It's too. Perhaps we'll see in time. You just let us know if Sean's mic is okay as he starts talking. So I agree with you. I really like the signature that you caught on Bitcoin's chart. But here's what I'll say. In order for this to sort of stay intact, for this golden cross, which is still very much intact on the 2-day time frame, in order for that golden cross to still stay a golden cross and not cross into a death cross, I'll be looking for price to live over that at the 55 exponential moving average. So if we start, for whatever reason, because there's been a time in history wherein price actually managed to take back the 200 EMA as well as the 55 EMA, and it lost it swiftly right after. So it consolidated over it for a bit and then lost it swiftly right after. However, that would, if it happens this time around too, that would give me a sign of growing technical weakness on the chart.
Oh, yes.
Right? At the very least, if this has to stay intact, and if for real, you know, Bitcoin is posturing bullish here on the technical standpoint, what you want to see here is price on the 2-day time frame living over the 55 EMA. Okay, the 55 and the 200 EMA. If for whatever reason price reclaims it, great. But then we break back down swiftly, that's not a good sign.
Now, I push back a little bit on that. You are largely correct, like 95% correct. This is what I want to say. If we see price live above it for a few candles and actually deviate away from it enough that the 55 EMA starts actually moving away from the 200 EMA, in my opinion, that's enough. Because then even if price comes back down and lives underneath it, that's just a buy signal. Because what we need to be using the golden cross over here as is not an actual indicator for support and resistance, even though you can, right? I'm not saying you can't, but where it's even more powerful is to understand the psychology of the market participants and the bots and the algos who will be trading based on whether price is converging into a death cross or price is moving into a bull market territory. Because let's go through the price history over here, right? You guys can see that right here, price moved really far away from the golden cross, right? And as soon as we start seeing the potential of the dead cross, the bulls activated and we saw it get defended, moved far away from it, pulled all the way back down to the 200 exponential moving average at one point, and that just ended up being a buy opportunity for people to get ready for their big trend trades for the long run. This is where, guys, you start seeing the long-term holders with conviction start entering the market. These are the periods when price actually retests the 200 exponential moving average after losing it. So right over here, we saw the test. We lost the 55 Kisha, held the 200, held the 200, and went on a massive rally. Now let's look at the next time we lost the 200 exponential moving average and actually got a death cross. Was right over here. Okay, this was all the way. The next time we lost it was only like, okay, we got the golden cross, or rather the attempted bear cross, in 2011. We got the next death cross in 2014. Okay, and then we stayed in bear market territory for almost a year, if not more. Yeah, 1 year, right? October 14th, 2014, all the way to December 2015. So that was almost like a year and a half, actually, right? Yeah. So that's when we triggered the next golden cross. And then what happened? Well, we got a massive bull run. And if you use the 55 exponential moving average as your guide, you would have got good buy signals, yes. But if you used it to get out of your entire Bitcoin position, you would have got shook out multiple times, which is why I suggest people who are trading for the long term use this as a guide for your posturing, but not so much for your long-term exit signals, right? Long-term exit signals. You can use it for your short-term trades, for your leverage trades, etc., but not for your long-term trades, in my opinion. So look at how well the golden cross caught the entire bull market, Krisha. As long as you played the golden cross, you are fine, right? You have missed out on this entire down move, of course, yes, but you have caught the next big short trade, which is what we used, if you do remember, for the big trade that we took towards the downside over here, right? Do you remember this bear cross that we got all the way in 2018? Yeah. So think about that. You got your golden cross, guys, in 2015. So you would have essentially gotten somewhere around, let's say, $350, $400-ish. And even if you exited somewhere around after losing this entire region over here, that's $10,000. You would have exited $10,000. So $400 to $10,000, not a bad move, not a bad trade at all. And then you got your next big short signal right over here on this bear cross, on this death cross, right? This was at around $7,000. Retested it right over here perfectly, and then boom. Where was your next golden cross? Right over here. Somewhere around, you'd say $7,500, $8,000. This wasn't too much of a run, or not too big of a run, but still, not nonetheless a 2x move, right? From $7,500 to around $14,000. And this is where it starts becoming a little bit choppy, Kusha, but it still keeps you on the right side of the market. And that's what's important for us as trend traders, right? Over here, you would have got in. And again, if you lost a 200 exponential, you could have gotten out if you wanted to. Or rather, you should have gotten out right over here, definitely, when you got the... I missed one. I missed a dead cross right over here. I should mark that out.
I would use the golden cross, honestly, on the 2-day time frame as a directional thing, you know, to keep my
Yeah,
direction,
exactly.
to keep my biases at bay when it comes to really picking the direction of the market right now. So if there is a persisting sort of golden cross, it's telling you that, okay, you know what, the bulls still have a bit of an edge here. However, notice how every time the 55 and the 200 EMA, they shift, they go out of equilibrium there, right? On these crazy volatile moves. When Bitcoin went from 4K to 20K, for instance, when it went out of equilibrium there, that's when, you know, you got to be a bit careful every time price does lose the 55 EMA, because there's a good chance that, you know what, there's, you know, we're entering a different sort of phase of the market. And if price comes down to 200 EM if price comes down to the 200 exponential moving average, how much of a move that is, right? Is it a 50% drop from there? If it's a 50% drop, that's when, you know, you need to start being a bit more prudent in your trades and understand, okay, you know, if you're in trade, how do you handle your position from there?
No, I completely agree. Watching out for that deviation from the 200 exponential and the 55 is also something to use as edge, right? But again, if you guys are playing for the long term, I would follow what Krisha said and use it as a directional bias. This is as a guide. Don't use it to enter and exit.
Yeah. It's not very good for. I mean, we're like, think of when the run started, right? After we got into this most recent run all the way up to 60K. I mean, what are you gonna trade on the 55? Like, it's parabolic at that point. It's exponential.
And
right?
I mean, I'll say this too. What? I'll say this too, guys, real quick. You need to be okay as a trend trader getting chopped up. Even though sometimes it's going to be painful, you got to just go back to the prices that I marked out for you guys and understand that all it took was catching one of these trend trades and you would have literally changed your life, right? And that's the trade-off that you're making. To get chopped up is the price you're paying to be able to catch that one trend. Like, let's say you caught this trend over here on 10th May 2020, right? When you got the golden cross. So you got chopped up a bit, then you had to get back in. And by the way, Mango, even though we weren't using the golden cross specifically, we got in a bit earlier, but we did get chopped up too. We were bearish for this entire period here, right? This entire period here, we were bearish, right? We had to get back in, we had to swallow our ego and take the pain, get back into the trade, because we had actually hedged a lot of our Bitcoin. Got back in, and then we caught this massive trade, right? Similarly with you guys can change your lives by just catching one of these trades. And now, it looks like we are seeing one more defense, Kusha. Again, I didn't mean to cut you off. Go on.
Oh, no, now... Come on, I forgot what I was saying.
Apologies, but I really wanted to get that out there, that all you need is to catch one of these trades. That's all, you know? And then after that, every other trade becomes so much easier to take losses on. And I know here we talk about losses so much in every video, but that's what trading really is, guys. It's really about knowing how to lose and lose well for when you actually do catch those wins and being able to sit through them.
Exactamundo. But that's good catch on the golden cross. I would totally have missed that. I clearly have not been paying attention to all of the golden crosses and the death crosses.
Yes, I mean,
want to put it in my face.
And look at what Bitcoin's doing at the moment. Like, all the triggers that are signaling, right? That we looked for, right? I'm going to go ahead and switch back to the charts here. Let's go through all of them. Okay, actually, I'm not going to show. So one of the big things that we're looking for is this squeeze on the Ichimoku 12-hour time frame. And I want to give a big shout out to Claudette. Jesus Christ, is that Claudette? Claudia. Claudette is from DVD, guys. I'm clearly playing that game way too much. Claudia from the Seed program. She spotted out a signature on the 12-hour time frame where Bitcoin reclaims it. loses it, fakes out, claims it again, and then goes on a massive run, right? You can see that's exactly what happened the last time we lost and reclaimed it, which was right over here, right? So we reclaimed it, lost it, had a fake out, reclaimed it, and then went on a massive run, right? And this is essentially what we're looking for Bitcoin to do again, right? And now we're looking for this to line up with our higher time frame indicators. We have our 3-day Ichimoku signal lined up here too. Can I rotate this? Yeah, there we go. So you see this big circle over here, guys? That's our 3-day Kumo twist. So we're looking for price to eventually make its way over there, lining up with the 3-day Kijun as well. Defended the 2-day 200 move, the 3-day 200 moving average. We have what else are we looking at? The weekly Ichimoku. Also getting defended at the bottom of the cloud, but specifically the weekly dynamic potentially breaking towards the upside, and yeah, everything lining up. What are your thoughts? Are you excited?
Okay, so you missed a critical one. Okay, it's the 25th of March, guys. We have less than a week from the monthly close. Yeah. Less than a week. I'll say this, Sean, we close over the 10 simple moving average on the monthly time frame. Everyone needs to really, if you're on the bearish side, you need to be careful, okay? If you're taking short positions against, say, a resistance that you're anticipating that, hey, you know what, price is going to get rejected from there, that's entirely fine if you have a hypothesis, of course, and if you have, you know, your risk parameters really set up for you. But if for whatever reason we close over that 10 simple moving average on the monthly time frame, I'm going to start switching. I'm going to start leaning bullish there.
I mean, think about this, Krisha. Like, the world is screaming bear. This world is screaming bear, but almost all of our technical signals are going off bullish, right? And it's paying off to follow the TA. This is why I always tell you guys that TA trumps all, because it keeps you safe, right? Fundamentals, I've learned the hard way, can actually, you can pay a big price for being late on understanding what's really going on with the fundamentals. And to really understand what's going on with the fundamentals, you either need to be the best in the field or you need to have an entire team researching things for you. And Krisha, look at the monthly right now. If we take out the high of the previous month, we'll essentially be triggering that bullish divergence that I talked about last month. We have a massive bullish divergence on the monthly time frame. That essentially points us to the top of the range over here at around 65,000 again. So there's a lot pointing to 65K.
Yes. So we are currently, so what you guys need to take away from here today is that we're currently approaching a very, very critical juncture. And depending on what price does in this juncture, now the region that we're looking at least the region that I'm looking at, Sean, let me know if your horizontals, your regions of resistance line up here. Okay, I am looking at the monthly 10 simple moving average, which also, by the way, if you guys remember, it was what really gave us the tip on that, okay, you know what, Bitcoin is likely going to see that pullback, at the very least getting down to $35,000. And when did we see that? As soon as Bitcoin lost the monthly 10 simple moving average, right? We saw that trade actually playing out to the downside. And we did get that. However, now we are price is threatening to reclaim that 10 simple moving average. And that, if you go back into the chart and look back historically, that has had really, really, really good playthrough.
Yeah. Yep.
So the 10 simple right now, guys, is coming in at around $45,858. Okay, so it's a very, very tiny range that I'm looking at right now, Sean. 45,000 up to 47K.
Yeah.
Okay. Now that range, guys, is a 2% range if I'm not mistaken. Let's go ahead and take that. Okay. That's around almost a 3% range. But compared to Bitcoin's prevailing volatility on the chart right now, 3% is nothing compared to the volatility that we're seeing on the chart right now. Okay, so it can make these moves, and it can happen fast. So it's a very, very critical juncture. And if we close over, I'm saying there's a good chance that we rally. The next region, if I have to be honest, is I'm looking at the highs getting back up to that 60K region. However, if we get rejected and say the monthly closes underneath the 10 SMA, then perhaps we see another retest of those critical levels down at around $40,000 all the way to $35,000.
Yep. So Kusha, that was so well put. Like, essentially, what you're saying is we are at decision point. We are at decision
Yes.
point, right?
Yes,
We're
this
decision-
is decision point.
Are you looking at my screen right now?
Yes, I am.
Okay, cool. So we have the multi-tenant SMA right overhead, right? That's resistance. Remember, it is resistance until we reclaim it. We said it last month too. When we came up there, things were looking good, but we weren't looking for it to close above. Okay, there was too much resistance on the weekly time frame. There was resistance on the monthly time frame and other time frames too. This time, however, things are different. Why? Because we have a lot of indicators start triggering. We have the consolidation actually starting to look like a reversal pattern, etc., etc. Over here, Krisha, I have the 3-day Ichimoku Kumo twist marked out. You see the arrow pointed?
Yes.
Okay, we also have 6 days and 12 hours to go for the next monthly close. That's 2 3-day candles left for us to play out the Kumo twist test. If we actually see the Kumo twist test play out before the end of the month, which is 2 3-day candles, we'll be closing over the monthly tennis swing. At that point, you just have to be bullish.
Yeah. Yeah,
Right?
I know I know I am. I'm gonna start being bullish at that point. Like it's gonna look very, very good for me. And I think about it. What's the trade from there? For those of you who actually likes, playing the ranges on this, even from there all the way up to the highs, that's still, Sean, it's a good 40%. You're looking at a good 40% range from there as well. And now this is another thing that I want to bring up before, we sort of approach the end. It's the fact that when price starts putting in that bullish structure on your higher time frames, and I'm talking about the weekly time frame. Okay, we're looking for those higher highs, higher lows. Once again, I know some of you guys are tired and bored of hearing the same thing, but as soon as we start doing that, that's when the bullish trend begins.
Yeah.
Okay, when the trend begins. It's not when we break the highs or whatever. It's when we start putting in that structure. Play that structure, because that will give you that edge to the upside as well.
Yep.
So that's something I learned, after the COVID dump, as well as in the 3K region. So it's when the trend starts is when the trend starts. That's when the run starts. When the trend starts is when the run starts.
So when would you say the trend begins for you?
The trend begins as soon as we start establishing higher highs and higher lows.
On what time frame?
On the weekly time frame.
Weekly. All right, let's go back to the weekly.
So COVID, and it does not necessarily have to be a neat looking trend. Look at COVID, look at the trend, get on over to the weekly time frame. Look at when we recovered from that COVID dump, right? If you're looking at that was a V bottom up, and that was a freaking it was an uptrend, but it was freaking ugly as shit.
Again, we got to give ourselves some credit over there, because if you had to look at the ugly trend, Krisha, where would you say the ugly trend started? I would say 7,500, right? Because I would look at this as the higher low, right? We used other time frames and indicators, of course, to get back into the trade, but I would be looking at this as the higher low, 6,500, and then we cleared that high over here at 7,460, which is what we were looking at actually to trigger our re-entry, even though we were looking at it on other time frames. And yeah, boom.
It came in at around, so the trend really, that's when we got in based on other systems that we have, of course. But the trend actually came in at around that 9K region. That's when it was very, very clear as to what. Actually, no, before 9K. What am I talking about?
No, I would say if you're looking at an ugly trend, I would be looking at this.
Yeah.
Right? Because the weekly is not going to have your most beautiful trend plays.
Yeah. So this was one example of an ugly one, but then there was one even at the 3K region, right? Now that was not, you had a series of higher lows being put in there, and then you had the wick highs that we got until we got that impulsive 20% move that nobody was expecting. And Bitcoin can't do that to you, so that's another thing that people need to be vigilant on. You'll have one candle that'll come in and just sort of completely annihilates the other previous candles that came before it. So these are things that you need to sort of, keep your eyes peeled on, but don't let your biases take over. Don't be price agnostic. Yes.
So you guys see what I just did here really quickly? You guys should be doing this at home as practice, just for you to be able to like spot the trend on the weekly time frame or any time frame, right? Just do this as practice. Try to get an idea of what the trend is actually doing, and then switch on over to your dashboard and try to match it with your high. Like, I'll quickly do it for you guys too. Does that work? Yeah, it does. If you switch on over to your Mango view, right, you guys can actually turn on your swing lows and your swing highs to be able to practice your high lows and high highs. Now remember, it doesn't need to match. It doesn't need to match perfectly at all, right? But it will help you start learning how to like read trends. And the weekly time frame, it's gonna be, you need to be, especially for Bitcoin, you need to be a little bit more subjective and understand that Bitcoin puts in these really ugly trends on the weekly time frame that you need to be able to spot. So yeah, use this to your advantage, guys. The swing low, swing high feature is completely free, so use it to learn. Use it on the daily, use it on the 2-day, etc., etc. Okay.
We're giving you the critical levels here. Yeah, 45 to 47. Eyes open, you guys. Eyes open.
I was gonna say something and I forgot. Oh god. Okay. Quick. We'll take a quick look at important charts on the macro time frame before we wrap up. Specifically, let's take a look at gold. Any thoughts before we wrap up on Bitcoin, or we good with Bitcoin?
No, I think you keep Bitcoin easy. Keep it simple. Don't overcomplicate it. This is the level that we're looking at. I am especially looking at these levels. We break, I'm saying things are going to start looking bullish for Bitcoin.
And what are your thoughts on gold? Would you have expected gold to just go on a parabolic move considering the macro backdrop? Are you surprised with gold? Disappointed? Happy? What are your thoughts?
Indifferent.
Indifferent. She doesn't care. She's like, F it. Gold is old.
That's it now. It's not even old as gold anymore. It's gold is old. You guys know. But gold is holding. Gold is holding. We start breaking back up over that $1,966 mark, that resistance. I'm saying this goes up for one more rally.
Yeah,
I don't know if the rally could continue, of course, and then we break the highs and everything. But yeah, 1,966 is going to be the dictating factor, at which point I think it establishes the next sort of trend to the upside. This looks just like a retest so far, Sean. What are your thoughts?
My thoughts are that I get to say I told you so, but nobody ever gives me credit for saying I told you so. Ever. I never get any credit. My thoughts are that I told you guys that as soon as we start seeing gold retreat, we're going to start seeing Bitcoin match gold's behavior, right? So Bitcoin tends to lag while gold is having its run, and then as soon as gold retreats, Bitcoin tends to do something similar to gold. And what Bitcoin did at the time was we put in this wick over here, right? And I said we're going to likely fill the wick very similar to how gold is filling its wick, right? And yeah, that's what we ended up doing. Now the question is, does Bitcoin continue and keep going while gold just stays behind? If we don't see gold actually catch a bid, I'm going to say that Bitcoin actually doesn't break, or Bitcoin has less of a probability of breaking 70K. Now, I don't want to get into why. I think that's a deep conversation. But yeah, so I would rather see gold also catch a bid, because yeah, just let's leave it at that. So I kind of want to see gold run eventually. At the moment, it's not. But like you said, it's holding a key level, so it's not bad. Gold making new highs is going to be good for Bitcoin, guys. Believe me, it is going to be good for Bitcoin. So gold is not necessarily the enemy for the short term. For the long term, probably. Let's go ahead and look at 10-year, US 10-year. Where is it on my list? What the hell?
Sean, Stan and Easy Shoda, they've come to you. They've come to your rescue. They're like, "Whoa, you did say that. Good job on that one."
Whoa,
and
what?
then Easy Shoda's like, "Sean, you legend. You the legend."
What they talking about though? I'm confused.
The gold thing. You're like, no one gives you.
Oh. Oh, right. Yeah. But, so Stan is like, "Whoa, you did say that." The reason the reason is because I say these things like weeks in advance, and then they play out over the long term, right? And most people want things to happen immediately, and yeah. Anyways, Uh, what was it going to talk about? Oh yeah, US 10-year.
The tenure, yeah.
Yeah. Okay, yeah, this is an interesting conversation, Kusha. So we can have an entire podcast, wink, wink, Sherwin, wink, wink, where we talk about just what's going on the US 10-year, the treasuries, etc., etc. What are your thoughts on what's going on at the moment?
It's a sell-off, people. So it can be looked at in so many different ways, right? Because the Fed came out saying that they are going to be increasing rates. That could have initiated a sell-off. It could have also initiated a sell-off with foreign sort of holders of treasuries actually selling into them because of the fact that with the whole Russia thing, right? Placing sanctions on Russia undermines the entire system. So now people actually holding treasuries, they're like, oh shoot, what if they suddenly, the US says that, I don't like what India is doing. Damn you, India. Sanctions on you. I'm going to be seizing your treasuries.
Yeah.
Like, think of that. Think of the game theory that suddenly plays out, right? So that could be one sort of thing on what's happening. Another thing is that we're seeing Dixie rallying right now, right? And that could also drive more demand for the dollar. Now, if people want that liquidity, they could be selling their bonds for that liquidity. At least developing nations holding U.S. treasuries could be selling that for liquidity. That's another thing that I'm looking at. So,
Yep.
And then you have pressure from the Fed as well. They're not selling, of course, the treasuries that they bought, but it has a psychological effect on the market when you say, okay, you know what, I'm sort of raising interest rates. That could add more pressure on people actually holding treasuries, because anyone can hold treasuries, right? It's not just countries or companies. It can also be individuals. It can also be retail, just investors around. So what are your thoughts? Sean is a lot more informed on the whole bond market than I am, so I'm very curious to hear what you have to say.
I would say that the situation right now is a lot more complicated than it ever has been because of, again, the war, but it's also primarily because of the sanctions put on Russia. It essentially now takes out a lot of the bidders from the market, right? Along with the fact that the Fed is also coming out and saying that they're going to be looking towards actual QT towards the end of the year. So, okay. Let me try to simplify this for the Mango viewers who may not be as familiar with the fixed income market, essentially the bond market, as the rest of us or some of us over here. In my opinion, what matters the most in regards to the bond market is not so much what the Fed does, but what the Fed says it's going to do, and then combine with what it actually does, right? So remember what the Fed actually said it was going to do at the beginning of the year. They postured extremely bearish, talked about multiple rate hikes, talked about quantitative tightening as well. They didn't do any of that really. They put one hike up, 0.25%. That's 25 basis points. That's it. In my opinion, the underlying message over there was actually dovish. If you compare to how hawkish they were a month or so prior, now they're actually dovish. However, they did mention that they are looking to QT towards the end of the year. They did mention that they're looking to keep raising raising rates or hiking rates, hiking rates throughout the year. But it doesn't matter. Let's say people are they're blowing it out of proportion when you add in the new information that's coming into the markets at the moment. And that new information is one, that CPI has a new print of 7.9%, which is essentially 8%. And if you take that into consideration, it doesn't matter that rates are going up. At the moment, yields are going up to around, what's it sitting at? 2.3, right? So even with that, the real yield is what, Krisha? 7.9 minus 2.3 is around 5.5, right? 5.5, 5.6.
Yeah.
Right?
Yeah.
So your
Negative.
Yeah, negative. Sorry, negative.
Negative.
Yeah,
Right.
negative, right? So your real yields are negative 5.6% ish on average, right? That that still that still is a very very loose environment in terms of money. Money is actually really really cheap regardless. Yeah, it's not as cheap as it was, but now with the new CPI print, you could actually argue that it's cheaper than it was in real terms, correct?
Right.
It's negative 5.6%. That's cheap. Now you also take into consideration that the war changes the dynamics of everything along with the sanctions, and I don't mean just in the fact that the US treasuries are losing credibility, but in the fact that the real tightening is not what the Fed is doing. I don't think the Fed could do whatever it wants. At its current juncture, the real tightening is going to come from the energy markets. And I've been trying to explain this to you guys for a while now. It doesn't matter whether the Fed tightens or not. The Fed could tighten or ease. The Fed could okay. How about we look at it the other way? The Fed could ease, okay, and reduce rates. But if oil goes all the way up to $200, does that make it easy for businesses to finance their operations? No, it's not going to change shit, right? Because if you need expensive oil to fuel your operations, things are still going to be tight for you as a business because you need to go and buy that oil. Doesn't matter if the money is cheap. The oil is expensive, and oil is right now the hardest currency that you could have, right? So oil going up is a tightening on the markets on its own. So all this narrative around the Fed is actually, in my opinion, a massive, massive distraction compared to what's going on. And what's really going on, in my opinion, is a massive transition and a deleveraging of the financial system to a new system. That's what's happening. It's going to take place over the next 10, 15 years, maybe sooner, right? And the people who don't realize that are going to be essentially letting their wealth transfer on over to the rest of us who understand that. And we want to be in that position where they're literally giving us their wealth. And look at that. That's the best explanation we can have for why we're seeing Bitcoin go up while yields are going up. Does any of this make sense?
Yeah, because also ultimately you're looking for like I think everything will boil down to incentives, right? When you're thinking of human beings, all of you, everyone does something to get something, to receive something. So what is the incentive right now to actually own US treasuries when these rates are freaking negative and deep in the negative, right? The real rates. So my question is that, okay, you know, they're selling all of this, but where's the money going? Bitcoin?
No, I don't think so. I don't think
gold?
so. No, I don't think so.
SPY?
Well, yeah, I think so. Let's look at ARK.
Right. So that's another thing. There is a lot of liquidity sort of exiting the treasury market. Now the question is,
yeah,
where
it's SPY.
does
Look at
liquidity-
SPY. Holy shit.
So there's so many sort of facets to this. There's so many freaking variables. So now that's the next major question that I'm very curious about is, where's the liquidity going? Okay, it's exiting the treasury market, and it is not just an ordinary market. The treasury market is the largest market in the world, if I'm not wrong.
Sorry.
Go on.
I'll let you finish your thought. Go on.
So no, my question is where. So I want to know that, okay, it's exiting, but now eyes out for where that liquidity pours into next.
So historically, if I remember correctly, I'll have to go and confirm, but throughout World War I and World War II, definitely World War II, because I remember that clearly, money went into the stock market, and specifically it went into the what would be considered tech stocks back then, right? So innovation, so essentially growth, right? And I think that was more so because people wanted to get away from value, because value tends to get inflated away in its real returns during times of war, because money printing is used to finance war, right? So I think we might be entering into that kind of mindset where, okay, whether or not people are debating that people are debating on the idea whether the world has really entered World War III or not. It really doesn't matter, guys, because we have entered World War kind of financing mechanisms anyways, right? To us as traders, that's all we care about. Have the countries actually started employing methods that are very reminiscent of the methods they used during World War I and World War II to finance their operations? And I would argue yes, right? If you combine that with you combine with what's going on with Ukraine, Russia, along with the pandemic, both of those together have forced governments to finance their operations, right, with printing, with money printing, and with inflation, right, by inflating debt away. Because that is exactly what they did in World War II. They essentially inflated away all the bondholders, and that's what they're doing right now as well, to be able to fund all of these pandemic programs, giving people money into their banks, etc., etc. And now I'm hearing thingies about them actually sending money to people's bank accounts to be able to pay for fuel, right? And
Yeah.
and is that not a form of warfare, right? Where they're not sending people to die in a war, but what they're doing instead is they're financially sanctioning a massive trade partner, someone that they rely on for energy. And what they're saying is, you know what? We'll take the financial hit. Yes, we rely on you for energy, but we will take the financial hit, and we will send our people money to be able to deal with it. And who pays the price? The people who fund the government, right? So that's exactly what happened in World War I. That's what happened in World War II. I have to go back and look at World War I because it was a tad bit more complicated. I don't remember how the Germans actually funded their operations. But World War II, that's what happened, for sure. So I think we're in wartime financing, and the gameplay over here is to be buying scarce assets and to be buying growth, buying tech, right? Buying the future, which is essentially scarce assets. So sorry, I went on a bit massive rant there.
So yeah, these are going to be. I think the moment, or rather the situation that people need to sort of keep their eyes on right now is the whole Russia-Ukraine thing. Depending on whether or not they manage to come to some sort of deal, that's really going to be the dictating factor in whether or not all of these prices sort of stabilize, and that could have consequences. We could see, that actually play out even in the bond market. So it really depends on what happens there. If this sort of war goes on, then yeah, the trade is still going to be on energy. Right now, I was looking at WTI. I was looking at oil, Sean, and I think it lost a critical level, quite honestly. If you're just looking at TA, pure TA, I think US oil lost a key level, and it's only once we really get back up over that resistance. The resistance that I'm looking at comes in at around 110. Yeah, 110 psychological, if you want to call that a psychological. But anyways, 110, if we start once again weekly closes over 110, I think oil goes up even further, 126 once again.
So what was the key level? 110? Yeah. I agree.
Right, we broke that a couple of weeks ago, but if we manage to take back 110 again, this oil goes for another rally. And it's going to be a pain throughout the economy. Like, we have freaking I feel like there are going to be a lot of currencies just crumbling under this pressure. A lot of economies crumbling under the energy pressure right now. And we're already seeing this play out in countries like Sri Lanka is apparently going through an economic crisis there, right? Their oil has gone up to, I believe, 50. It's increased by 50%.
Oof.
50%. There are like lineups. I was on the news, lineups, and some people died and standing in line waiting for oil. It's insane what's happening. But yeah, this is going to add massive pressure depending on what the outcome is in Russia.
Food and oil are the major tightening forces on the economy. Those are the real tightening forces. As long as food and oil are cheap, people are willing to tolerate a lot, right? The general populace are willing to tolerate a lot. As soon as you tighten the oil conditions for a country, the people revolt, food as well. People revolt, revolutions are caused on the backbone of food prices going up. God damn, like if you guys think about it, Pearl Harbor was because of oil, right? What the USA did was they essentially baited Japan into attacking them. Why? By blocking out their oil, right? They put trade sanctions on them and basically starved Japan of oil. And then Japan was like, damn, we won't be able to continue operations unless we do something about this. And Japan was literally forced to make the first move on USA, basically allowing USA to enter the war. And that basically decided the course of events after that. So oil is actually gas prices. Oil is everything. And at the moment, there is, in my opinion, financial warfare going on, and you're seeing it reflect on the charts.
Hells yeah. Interesting times to be alive, guys. These are interesting times indeed. Alvaro says, in my country, price of bread is a huge thing. And has it gone up?
Has it gone up? I'm guessing.
I think prices everywhere are going up. If oil is going up, I feel like
check out what Julian said, Krisha. Julian's like, World War One, belligerents left the gold standard within days of the war starting, so that they could print to finance it. There you go, man. There you go.
Jesus Christ. I feel like we're gonna see a lot of currencies crumble if this goes on. A lot of fiat currencies will crumble. And especially with what's happening with Dixie and everything. I don't understand the whole rally in Dixie, but dollar starts showing strength here. Yeah, people are going to feel the pressure.
Look at Bitcoin, Krisha.
Wheat futures. Apparently there was some news. I don't know if it's true, but there was some news that Russia was blocking wheat as well.
Yeah, Russia. Okay, so Russia is the world's second largest producer of wheat, and Ukraine is the world's fifth largest producer of wheat, right? So together, the two countries being at war basically puts a massive squeeze on the supply of wheat. And they also block. So what I believe Russia is doing is blocking out the trade routes around the Black Sea from exiting or something like that.
What is happening? And Bitcoin is rallying in these environments. SPY is catching a bid. The bonds are selling off. Usually it's always the risk-off assets that really catch that bid. And we're seeing the opposite right now.
Well, you can still leave your country if you own stocks. You can still leave your country if you own Bitcoin. Like Apple is likely going to survive a world war, right? I would think it does. So people are betting on that.
Bitcoin looks sick here, guys. Bitcoin is making a move. Eyes on the prize, my friends.
The petrodollar is under threat. I think the petrodollar is under. I think that story is done.
We're going to see a lot of volatility, I feel, in the currency pairing between USD and AED, which is the dirham, right? Or the dinar. Basically, the Gulf currencies. That's always been stable. It was always like $1 to $3 or something. But yeah. I feel like that's going to start seeing volatility. That pairing especially is going to start seeing a bit of volatility if that pegging sort of goes away, right? That whole thing of the oil standard goes away. So, and I think they're already alluding to that, right? The Saudi king and stuff, with actually willing to price oil in the Chinese yuan. So these are like the first sort of moves in terms of depegging from the whole US dollar system, basically the whole Bretton Woods system that was created, Bretton Woods 2. That was something that we spoke about in the last video.
Yep. We should take a look at the 3-month. Turn on your Ichimoku as well.
3-month time frame.
The quarterly,
Let's go.
essentially.
What is that? That's a freaking whipsaw right there. Take it up, take it down.
We're closing the 3 month in 6 days as well. It's a really important candle coming up, guys.
Goodness. Bull flag. It's a fight, guys. This is the fight. This is where the bulls and the bears fight.
Okay, I'm going to show you guys one last chart before we wrap up. I'm going to show you guys the 12-month chart on BLX. And I want you guys to understand that through Bitcoin's history, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles. Okay, in Bitcoin's 12 candle history, there have been only 2 red candles. Now play that as a probability play and calculate your chances of having a red month, right? Sorry, a red year. So I said this at the end of the year to you guys, right? I showed this to you guys around December, and I said I posed 2 situations to you guys that you could combine. I said this. I'm gonna write it down for you guys. I said first, unlikely for Bitcoin to have a red year, which means essentially you can buy at the beginning of the year and you're likely to have a green. You're likely to still be in profit, right? F it. 2, Bitcoin loses 10 SMA on monthly, likely gonna see a pullback. 3, that will be your long-term buy opportunity. 4, where? Well, monthly Tenkin 21 EMA. Do you guys remember this? What the hell? Why is this? Well, just look at it this way. And this is essentially what we are playing out over here now. Right? If you look at the yearly, guys, it's very, very unlikely to have for you to have a red year. But even if you do, Bitcoin tends to rally anyway. So if you're thinking 5 years down the line, thinking 10 years down the line, right? This is one of the best long-term probability charts that you have going for you, right? Like, combined with the fact that the monthly time frame lost the 10 SMA over here, right? We'll put it up. And we were hoping for this, Kushan and I. We were hoping that, hey, if monthly 10 SMA, if the monthly 10 SMA is lost, we are likely going to come down and test the Kijun, 21 EMA, etc., etc. What we didn't want happening was a repeat of this situation over here, where even though we tested the monthly 21 EMA, we ended up retesting the Kijun, which was resistance at the time, and then came back down all the way down to 3,000. This was the COVID event though, right? An outlier, yes, but you could say that the actual charts dictated the event to you because you had a rejection of the Kijun, which was resistance at the time. This time around, the Kijun was support. That was the big difference. So losing the Kijun this time around would have still been ugly, and maybe even worse, because that would essentially initiate you on big bear market, because last time we lost the Kijun for the first time was over here, 2017, right? Initiated your big bear market. So losing your Kijun over here would have initiated a big bear market. That would also line up losing the Mango dynamic. So I'm going to be wrapping up with that, guys. Reclaiming the 10 SMA, in my opinion, just like Krisha's opinion, initiates an uptrend on the monthly time frame. Which, Krisha, what are your thoughts? Where do you think we go? Give the Mango community your long-term forecast based on the monthly time frame if we claim the 10 SMA.
Long-term forecast. Well, 60K first stop, of course. I have no long-term forecast, man. I have to really sort of go in and look at, I have to do some additional TA to really give you some solid numbers, if we're being honest. But yeah, if we start breaking the 10 SMA, I'm saying 60K next stop, we get to the top of the range.
Yeah, and I think the way Bitcoin's shaping up at the moment, it looks like it wants to. wants to break that level.
Yeah, so eyes on the prize, my friends. Eyes on the prize.
All right, guys, with that, I hope you guys enjoyed this stream. It was impromptu. Just wanted to show you looking at my chart. Is this legit? You're the pattern queen.
What am I looking at?
My
Oh yes, that is
resistance
legit.
line.
Of course, it's legit. That's
Look at
an
the volume.
ascending / symmetrical triangle that is showing a lot of strength right now. And if we break Buckland, just give them the measured move. Actually, for those of you actually playing those lower time frames, exciting times for Bitcoin. Finally, the volatility has entered. We've waited long enough. Thank you so much, Bitcoin.
53K.
Taking your own sweet freaking time.
All right, guys.
There we go. 50K.
Yeah, apologies, didn't mean to interrupt. I just want everyone to really buckle up and get ready for a really nice trading environment, whether it be for long-term trend trades or at least mid-term trades. On the altcoins, mid-term trades are of course quicker, and you will see those opportunities, right? There's still resistance overhead, so don't hesitate to take profits if you do see key resistance levels. Now's the time to be studying, right? If you guys are on the C program, I recommend going and rewatching the modules that you are using for your trading strategy. So for example, if you are a support and resistance trader, which might be a good time to be a support and resistance trader, go rewatch those modules because there are things that you're forgetting. Rewatch the module on order flow. Watch the order flow module, and more importantly, go and read the Mango lessons, right? That's literally the easiest thing you can do. Just go ahead and read the entire chat log over there from everyone's experiences that people have posted. Really nice stories. Read that. And yeah, time to focus, time to buckle up, time to take advantage of the markets because opportunity is around the corner.
Yes, sirree. Buckle in. Ryan C says, hey Sean, in the Mango Seed program, is there any curriculum around the historical events? Really interesting when you talk about these events and the economic impact of them. There, unfortunately, is, there's no thing on historical, but of course, he goes over certain fractals and stuff that have happened in the past.
So if you're talking about like history in terms of monetary history, I don't dive into any of that in the Mango C program, although we have thought about doing that, but we decided to keep it more about the TA. And I do talk about the history of how many of the financial tools that we use, especially in Mango, things like Ichimoku, candlestick analysis, etc. We talk about the history of how all of that came to be. What I would recommend though, for you to get a more unbiased opinion, of course, is to talk to one of the seed members directly and ask them what their thoughts are about the C program and what there is in the C program, etc.
Yes. Yip-de-doo. Thank you so much for tuning in, you guys. Enjoy your weekend, of course. Enjoy your weekend as well, everybody. Take some time off. Spend it with your family, your loved ones. Have fun.
I'm here telling them that they should buckle up and start studying, and you're like, take the weekend off.
You can study and don't take the weekend off. Like, what the hell? It's all about balance, right? So yeah, enjoy it though. Whatever you do, enjoy your weekend.
Indeed.
And
ciao,
we'll
guys.
guys.
Ciao, Alvaro.
Yeah.
Thank you everyone for joining. Alina, Murli, Julian, Mark, Stan, of course. Stan the man. Who else is in here? Tan made it too today. Good to see. All right, guys. Cheers.
Ciao, you guys.
I'm exhausted.
Ciao.